Welcome back to the channel. Tesla stock surprisingly had a pretty good day today, even though there was a bit of selling pressure in some of your AI stocks. Tom Lee actually says that he expects we could see a slowdown to some of the high-flying AI stocks and some of the momentum that we have seen over the last 6 months or so. I'm going to share that clip with you in today's video, but there is reason to believe Tesla stock is on the precipice of a big move. There's actually some very suspect option activity today, maybe indicating that this move that I see for Tesla heading into the 500s could come sooner rather than later. Now, we're also going to talk about the upcoming catalyst for Tesla. Tesla very soon is going to be launching FSD V14, as well as Tesla's delivery numbers come out in this upcoming week. We have seasonal weakness that should be coming to an end soon as well. Looming potential government shutdown. We'll discuss that in today's video as well. Hit the like button and subscribe to the channel. Oh, by the way, Dan Ives says in a bull case scenario next year, Tesla could be almost $1,000 stock. Exciting stuff. Hit the like button, subscribe to the channel. Check that link out down below in the description of today's episode. And let's get into Tesla stock. We take a look at the option activity today. It is unusually strong for Tesla. There's a lot of positioning. Like, take a look at some of these trades. October 9th expiration, $500 call on Tesla. This trade, $113,000. October 16th, $500 call, $197,000. You get the idea. There's a lot of unusual trades taking place today. Even look at these. January 2026, just a jump, skip, and a hop away from now. A $900 call. Two of them, $187,000 here and $157,000 here. Firms are making some very bullish bets on Tesla. Very short-term bullish bets, okay? Here on the day today, you had 143 different trades totaling $333 million with a positive order value of 90%. Hedge funds and institutions maybe are preempting a larger move for Tesla. Maybe some of them know that some news is coming out. Now, we do know that delivery numbers for Tesla come out next week. On Thursday is the 2nd. That's the day we should get delivery numbers. And the whisper number on Wall Street is about 430,000, but that number could come in higher than expected. Now, Tesla is rapidly becoming an AI story, not just an auto company. So keep that in mind. That works good and bad, right? If deliveries blow out to the upside, I'm sure that's going to be seen as good news, but it's becoming less and less important what deliveries are, in my personal opinion. But I do think if next week's number is good, then that is going to be very much a positive for Tesla stock. And I think we are one catalyst away from a massive move in the stock into the 500s as the option activity suggests. Now, there's been some analysts recently that have said that FSD V14 could be such a big improvement that could be a big catalyst for Tesla stock as well. We are expecting that's going to come out over the next week or two. Now, starting on Wednesday of next week, we are leaving September, entering October. October 1st is on Wednesday. Well, if the government is not funded by Tuesday at midnight, the government's going to shut down. And I don't have any way of telling just how negative that could be for the markets. Assuming we get a last minute deal done, Wednesday could actually be a big positive day for the markets. But we are entering into the final 3 months of this year, which is seasonally a very strong period for stocks. October, specifically November and December. And I think Tesla is going to be a prime beneficiary of this. Just look at Tesla relative to other stocks recently. It's broken out. It's broken above that $400 level. It's really been holding a lot of support around 420. And again, we are just one catalyst away from a leg to new all-time highs. The momentum has really shifted in Tesla's favor with all of these analyst notes coming out recently talking about Tesla as a leader in embodied or physical real-world AI. This puts Tesla in a category that not too many others are in, this physical real-world AI category. And Tesla being a market leader in that, well, it's going to help the valuation story for Tesla. In fact, Dan Ives today raised his price target to the highest on Wall Street and had some very bullish things to say about Tesla. We talked about this in the prior video, but I do want to highlight this again in case maybe someone didn't watch the video earlier today. I think it's that important. We're going to look at it again. Analyst Dan Ives has raised his Tesla price target to $600 per share from $500. Dan now believes Tesla could hit a $3 trillion market cap by late 2026. That, my friends, puts you at about $980 per share, because $1 trillion is about 360. 2 trillion is about what, 680, something like that. Maybe it's 320. Either way, you're getting close to about $1,000 per share in Dan Ives' bull case scenario. Dan Ives says, quote, "An accelerated AI path for the company is now on the horizon, and investors are underestimating the transformation underway at the company. We believe Tesla is taking major steps in advancing its AI revolution path, with autonomous and robotics front and center heading into 2026. That will be a game changer and define Tesla's future. We maintain our outperform rating." Musk is now driving Tesla into its next stage of growth as quote-unquote wartime CEO, and we expect robotaxis to be rolled out aggressively to over 30 US cities within the next year. 30 cities in the next year? Yeah, if we get that, Tesla stock could be a $1,000 stock next year. You're talking about thousands of robotaxis out on the road. Dan Ives says, "We estimate the AI and autonomous opportunity is worth at least $1 trillion alone for Tesla, and we fully expect under a Trump White House over the coming year that these key initiatives will now get fast-tracked as the federal regulatory spiderweb that Musk and co. have encountered over the past few years around FSD autonomous clears significantly under Trump. Trump wants the US to stay ahead of China in this AI arms race, and autonomous is a key factor in who wins AI. With Tesla playing a major role on robotaxis, we expect over the coming months an easing of the federal framework for autonomous, with more power going to the federal regulators, with states having less authority on the autonomous rules framework. We believe Tesla could reach a $2 trillion market cap by early 2026. In a bull case scenario. So that's 640 roughly. And 3 trillion by the end of 2026, which is closer to 1,000 as full-scale volume production begins of the autonomous and robotics roadmap. The AI valuation will start to get unlocked in the Tesla story, and we believe the march to an AI-driven valuation for Tesla over the next 6 to 9 months has now begun in our view, with FSD and autonomous penetration of Tesla's installed base and the acceleration of Cybercap in the US representing the golden goose for Musk and co. So you're really starting to see Wall Street getting behind the Tesla story. But Tom Lee said, quote, "There will be an AI shakeout, but valuations are still reasonable compared to the late 90s. So that's partially what I think you're seeing today. Is a little bit of the AI shakeout in some of the stocks that have done the best. So I want you guys to listen to this. The clip is about 4 minutes long. Then we'll wrap this video up again with some of my step-by-step expectations for Tesla.
Let's welcome in Fundstrat's Tom Lee, a CNBC contributor. It's good to have you back. I know you love this trade. But what do you make of what Mr. Griffin had to say?
Well, I agree with him. You know, we're in a period where there is a super cycle and exponential growth opportunities within AI. But it doesn't mean every company that has elevated valuation today deserves to actually have the capital, and that company may not even reinvest that capital properly to be a survivor. So I agree there is going to eventually be a shakeout. But I think valuations, strangely enough, are actually pretty reasonable today compared to 1998. Because, 1998 was that liftoff point before that final 18-month surge. And I'd say the best benchmark is NVIDIA trades at 26 times forward earnings. Cisco at that same exact moment was at 60 times, and Cisco's PE peaked at 210 times forward earnings. So NVIDIA to me is still a bargain at 26 times. It's cheaper than Costco and Walmart, which are close to 50 times forward earnings.
Sure, but all valuation isn't created equal. And I'm not especially clear as to whether Mr. Griffin looks at the valuations of an NVIDIA, for example, and says, well, that looks a little out of hand. It reminds me of late 90s activity before the dot-com bust happened, parabolic. And they're related to AI. And that's where he says, whoa. We're placing way too many bets on what might happen in the future. We think we know what's going to happen in the future as it relates to NVIDIA and some of the other hyperscalers, but it's a whole host of other names that have literally ripped over the last 3 months, at least, that might bring investors a little bit of pause.
I think that's correct, Scott. There's a difference between a company being scarce in the public market. Like, let's say there's an IPO of a company and it's the only way for you to get exposure, versus that company being truly scarce to the ecosystem. So I do think investors have to discern, is this company going up a lot because this is the only name out of a possible bevy of private companies, or is this the company truly unique and one that is so scarce, I got to give it the N equals 1 valuation?
I mean, I think he looks also at a stat like JP Morgan Asset Management's Michael Sembelis brought to us today from his report. And he's good at what he does, okay? Quote, AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, and 90% of capital spending growth since ChatGPT launched in November of 2022. Now, some would say, well, obviously, and all of that might be justified, but those are large numbers. Those are really large numbers that have carried a boatload of the weight of this move in the market since then.
Yeah, and that's a moment in time, Scott. I mean, just to give some perspective, NVIDIA is about 8% of the S&P 500 market cap weight, but it is also 7% of the earnings. So it's not necessarily distorting equity valuations. And in terms of what companies are excited about, if companies are saying that AI is something where they're actually allocating capital, and many are, of course, are seeing productive gains, I think it's justified that would be what you'd expect to be the first wave of investment and spending is around directly into the ecosystem. But of course, over time, we'd expect that spending then to deliver productivity gains and other benefits. So that means if AI, and I'm comfortable with the idea it's a super cycle, we should see a broadening of the benefits and then also the broadening of opportunities over time. So it's probably a moment in time makes sense, but it should be broadening.
So yeah, I think Tom Lee's commentary today partially explains why some AI stocks, Quantum, like IONQ, down 3% today, BBAI down over 5%, Applied Digital down 5%, Nebius down about 1%. It explains why some of those names are selling lower today. People listen to Tom Lee. People, respect what he has to say. I think a lot of people miss the last part, that the AI theme should continue to broaden after a little bit of a shakeout. Tesla's stock today didn't care at all. Tesla's AI story is just getting started. People haven't even thought of Tesla as an AI company for longer than a week, maybe. Again, I think there could be a bit of a chase that happens in Tesla. We are one catalyst away from a massive rally in the stock. Could be next Thursday. Could be FSD V14 in the next week or two. I don't exactly know down to the day or second when that catalyst will be. But to me, it does look like we are one catalyst away from another leg higher in the stock. And even then, the stock's RSI hit a high recently of 81. You're back down to like 69 today, 68, something like 68, something like that. You have room to rally to the upside. Now, again, government shutdown, weird seasonals for Monday and Tuesday. Keep that in mind. But after Wednesday, seasonals improve. We're getting into the holiday season. We're getting, into Q4. The path higher looks a lot more likely than the path lower at this point for Tesla stock, and what could be a pretty dramatic rally from here. Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time as well, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.